Hi there, Beata Bukowski coming to you with another weekly economic update. As you can see, coming from Galena, Illinois, rather than Chicago, Illinois. But nevertheless, I've got a whole insight on what happened last week economy-wise. Obviously, the stall was stolen by the Fed, hiking 75 basis points, as expected, on the Fed fund rate. Remember, Fed fund rate does not equal mortgage interest rate. We can talk about it offline some more. What the Fed did mention in their announcement after the last week's meeting is that another unusually large increase could be appropriate. What that means to us, translation, at the next meeting, September 20th, most likely we should be expecting same 75 basis points going up. And by the way, this is only the second time since 1994 that has happened. In other news, the existing home sales have dropped. They dropped by 8.6% from May to June, and that is more than what economists have expected. Sales were also 20% lower to those compared in June of last year. This is a critical report because it does show the pulse of the housing market as it measures contracts for homes that were previously resided. New home sales, which measure signed contracts on brand new construction properties, also declined 8.1% in June, and that is a 590,000 annualized pace. May's report was also revised sharply lower from 696 to 642,000 of signed contracts year over year. That's down 17.4%. Important note, median home prices on new construction for new homes have dropped from 444,000 to 402. Median is not average. What does this mean? It means that more homes under 402,000 price mark have sold than over 402,000. The Fed's favorite measure of inflation, consumer personal consumption expenditures, has been released last week as well, and that showed an increase from 6.3 to 6.8%, and that is the highest number since 1982. In other news, as expected, the first reading of the second quarter GDP shows GDP down 0.9%, which makes it a second consecutive quarter. And as many economists will tell you, that really dreaded word, recession, is definitely on very many tongues right now because two consecutive quarters of negative numbers point to recession. Lastly, the continued unemployment claims, those dropped a little bit, but new claims increased a tiny bit last week, which, if we take a 2-week average, look like new applications are starting to tick up. When there is going to be a very definitive number on that, we will then have just yet another sign of pointing towards recession. Beata Bukowski coming to you from beautiful Galena on our weekly economic update. Over and out.